GB Cycles here with an update on May the 7th. So back again after 2 weeks. So let's see my 4-week cycle here. I think last time I said I was expecting some kind of a pop up here with this bullish phase, and it came just a little bit late. We had a drop down, and then we had this 4-week cycle pop that we normally get. You know, we had it here and here and here and here. You see, always at least we get a pop up with the 4-week cycle. Sometimes we get a rally. So we had a pop, but it was sabotaged, and then we popped up back again on Friday, and now we see the cycle is bearish for the coming week. But overall, I don't think this looks very bearish. You know, my cycles here's the composite of some longer term cycles, and it's very bearish into mid or late June. But we see market is handling this well. It doesn't look very bearish, but you know, it's still time for some kind of low here. But as time goes, without any capitulation, it will more and more favor a higher low, or you know, perhaps a double low. But you know, it doesn't favor a capitulation to lower lows as time goes here. And soon, you know, if nothing bearish happens, soon we have maybe realized that we should not focus on any downside here, but rather some kind of a buying opportunity coming up in the summer for the breakout rally. So if you look at the 237 calendar day offset, we see we have actually broken out of this offset, and that's a bullish signal. And you know, as long as we stay above here, it favors some kind of a continuation to the upside. And if we look at my 7-year cycle in red here, we see the cycle is very bearish into late June. Also, you can notice in green here I have the fixed 40-week cycle, and with the red vertical lines I have marked 20-week cycle lows. You see the 20-week cycle lows, they either happen here at the 40-week cycle low or here in the middle. But this cycle, I keep tracking it, but it's not very useful. It's not a very regular good cycle. But anyway, we see how these lows were 20-week lows, and this low in March was probably a 20-week low. And the next low should be around August, September perhaps. So we have to, if to see something bearish here, we have to have a left translated cycle that should break down soon and could go down into August, September, or even October. But so far it's holding up okay. And in gray here we have the 40-week offset. And we see this offset, we have broken out above it, but we could break down below it. So you know, the previous offset, we were at this point we had broken out of it, but with this offset we could break below it. So 2 different offsets, 2 different signals possibly. We have a setup for a possible down leg in the bear market. We are here in black. We had a sell signal, but you know, we just squeezed right back up again. The sell signal still in play, but we couldn't get continuation to the downside and popped right back up again on Friday. And you know, this sell signal, this setup, if we don't start to flush down soon, it's not looking this scenario doesn't look right. It's not what's going on. But we have one analog here from 2008, just before the crash in the fall. There's some kind of a similarity here, but if so, we should go down coming week and soon start to really capitulate. So, you know, I'm showing this could happen, but I'm very disappointed with this bear market, and I'm losing faith in it. I can't see us really flushing down to any new lows here. I'm starting to believe we could get some kind of a buying opportunity in the summer, and then we rally. But what was my point here? I had something. Well, I forgot about it. And you know, hourly data, the Dow Jones Industrial, it looks like a classical setup. You know, we have broken this trend line. We finally had a low here to make a good trend line that we later could break, and now we are back testing it. However, my wavelets do not look like a very good selling setup. But if things are bearish, I would like to see surprises coming to the downside. So you know, my wavelet here suggests we could go. We have a bias for upside for another couple of days. You know, Monday, Tuesday, bullish bias. But if things are bearish, we could have some sabotage, meaning, you know, gapping down, trying to get back up again, and it ends up like some kind of a bear flag, and it's a lower shoulder, and then we can have continuation to the downside. So not an obvious selling setup in the hourly data, unless we get some surprises. But overall, it doesn't look very bearish. I'm disappointed. Yeah, now I remember my point previously. You know, the crash phase of my 7-year cycle was here into last fall around October, and I said that's the easy part of this bear market. Into this point, there's a very strong bias or edge, or call it what you want to call it, for downside. But after this capitulation phase, it gets much more difficult. You know, the bear market may be over at this capitulation point, or maybe we get more downside, but there are no guarantees. And exactly that has happened since the September-October lows. It's this confusing part where is this a rally, a new bull market, or is it just a long bear market rally before we roll over here? Yeah. As time has, as this bear market rally has gone on for such a long while, I'm starting to believe we're not getting any very low capitulation lows here. But you see, we have a trend line here. We could, you know, trigger some sell signals, making lower lows, but I don't think we're going to new bear market lows here. So we'll see. See you next week.